Okay, so just wanted to start on a lighter note because I know everyone is a little stressed with you know what. So today I'll be revising cash flow statements, and I think it's a little late to make a video, but hopefully you'll watch it after the ME exam. So I think it's fine. Okay, so firstly, because this is the video I'm making after the um, clarification came from ma'am. So tomorrow paper there will be 4 questions. I don't know what 4 questions will be there because honestly, there's only ratio analysis and cash flow statements from which questions can come. Okay, so maybe they might be asking 2 questions on ratio and 2 questions on cash flow. I'm not so sure. Okay, whatever it is, we'll see. So for ratio analysis, I've already uploaded a video earlier, so you can watch that. And for cash flow statement, I'll make videos now. Okay, so how I planned about it is because we have little time, so I prepared notes in handwritten format because tomorrow's paper is going to be handwritten, unfortunately. But so I've made it in handwritten format, so it will be easier for you to see how to make it um, in handwritten, because in Excel you've already done it. But so anyways, so in the first video that I'll be making now, I'm going to talk about cash flow statements in general, and then I'll talk about the sum. Okay, so if you're clear with the cash flow statements, then you can directly go into the sum and skip this video. If you want a little bit of a clarification, you can watch this video and then go into that. Okay, so let me just share my screen because I've already uh, scanned it and put it here. So yeah, so that's another thing that I wanted to say is that for tomorrow's paper, please make sure you scan things on time and upload it, because every question has to be uploaded in a separate file, and like we tried, but it is what it is. So okay, so let me just open up the notes and I'll show it to guys. I'll open up everything. Okay, got it. Now let me share a screen share. Okay, so I hope everything is visible. And see, cash flow statement. So cash flow statement is basically a cash account. So cash account, any cash account. So this is a asset item. That's why the balance starts on a debit balance and ends in a credit. So there are two kinds of flows that can happen, either cash inflow or a cash outflow. If cash inflow is there, it increases the cash. That's why it's on the debit side. Cash outflow decreases the cash. So it's on the credit side. Now, in general, we can classify any kind of a uh, cash transaction, as either operating, financing, or investing. Operating means day-to-day operations. Financing means anything related to borrowing money, repaying money. So how do you borrow money? You borrow money by either share capital or through taking loans. Now, if you issue share capital, then you have to pay dividend to that person. And if you take loans, you have to pay interest. So that interest is the cash outflow. That dividend that you pay is the cash outflow, and the and whatever. So if you if you borrow money, that's a cash inflow. If you repay that loan, so you have taken a loan and you're repaying back, that is a cash outflow. Okay, so operating हो गया, financing हो गया. Now investing activities are those activities which you do outside your business. So other than your operations, you sometimes invest money into assets, investment, normal investments, and those, like suppose you buy a house, or like buy a plant and machinery, buy some furniture fixture, buy a fixed asset, buy land, whatever. So those come under investing activities. So this is how a cash book looks like, cash account looks like. Okay, so generally cash flow statement captures cash, bank, and cash equivalents. So don't have to go into too much detail. I don't think it will be that detailed. Okay, so cash and bank, these are the two things. Now, if you see the same thing, what happens is when you represent that in the cash flow, there are two methods. One is your direct method and indirect method. So direct method is very easy. What direct method does is just takes operating from here and operating from here. Inflow is positive, outflow is negative. That becomes your cash flow from operating activities. financing is positive, like it's just breaking down the cash flow into three buckets, and ultimately the total of these three is what is your cash outflow. Then you add the opening cash outflow. So this is the opening, and you get cash out, closing cash outflow. So this is the opening cash balance. You add whatever cash flow is there. Positive means cash inflow, negative means cash outflow, and you get closing cash outflow. Now the issue with this method is that this is based on the cash book only. So if you see over here, this is just showing the cash account and representing this part. But in real life, my books of accounts are maintained on an accrual basis. So you must remember this from the orientation, I guess, that books of accounts are maintained on accrual basis. So that's why this is not a very good representation of a cash flow. Okay. So now what do? We prepare cash flow on the basis of the balance sheet and profit and loss account. So that is called a indirect method, because you're not directly taking the cash book, you're indirectly inferring what the cash flow was. So this is the second part. This is a little bit complicated than the direct method, but it's more accurate because it gives you a more granular view of what is my inflow and outflow. Okay. Now this is my profit and loss account and balance sheet. Okay. So I've not added the things on top of this, so it'll be like a revenue, like so income from business, income, other income, total revenue, after that expenses and stuff, and come to operating profit. Then you reduce depreciation, amortization, foreign exchange losses, interest income, dividend, whatever, and then you get profit before taxes, and then you deduct taxes and then whatever. And here balance sheet, I've only shown the main heading. So like equity and non-current liabilities, these are these green things are over here. See, I had financing activities was this. So these are all financing. These are the places where I get my money from. Okay, so this is my equity and non-current liabilities where I get my money from. Non-current assets and investments on the this thing is where I invest my money. I invest my money in investment in maybe in the stock exchange or something, or I invest my money in fixed assets. So this is where I invest my money, this is where I get my money, and this is my operating things, current liability and current assets. So whatever is in yellow is my operating, this is my financing, and this is my investing. So that's the main bucket of how earlier we only had cash. Now on the basis of this thing, this is how it's made. Okay, there might be some overlapping things, like even depreciation will have an impact on non-current asset, because and then interest income will have an effect on your financing activities. So there are cross things, but we'll get to it. Okay, don't worry. Now this is the format of the cash flow statement, and I made another format, so I'll use this one. Okay, so where do we start from? The place where we start from in the cash flow statement is a profit before taxation and extraordinary items. This is here, profit before taxation and extraordinary items here. Okay, then you try and add back. So if you categorize the entire cash flow into three parts, so let me just area highlight. Okay, so let me choose a color, orange. Okay, so in a you understood there are three buckets, cash flow statement, there are three buckets. Now within see, these two are very easy, investing activities and financing activities. Whatever is the change in the share capital and borrowings, that will come in your financing activities, and whatever is change in your assets, fixed assets and investment, that will come in investment. These are very easy, don't worry about that too much. Main problem area is this cash flow from operating activities. Now cash from operating activities, you can broadly classify this into three parts. So first is, here is what you start from. This is your profit before taxation and extraordinary items. Okay. Next is your one second. Area highlight. Okay. Next is your adjustment for non-cash and non-operating items. Let me just change the color. Okay. Adjustment for non-cash and non-operating items. This is the second thing. And the third thing is operating profit. This is the working capital changes. You do this and you'll get the cash flow from operating activities. Don't worry, when I do the sum, it will be more easier. But for now, just think that these are the three main brackets. First is where you start. You add back the adjustments, which are non-cash and non-operating items. what you get is a operating profit before working capital changes. Then you incorporate the changes in working capital, and ultimately you get cash generated from operations. Got it? Um, okay. Now, okay. Now another thing is this thing, adjustment. So maybe when I do the sum, it will be easier to understand. So basically, you start from the bottom, and then you slowly add back the things which are not relevant. So if in the profit and loss account there are anything that is an operating activity, like anything related to operations, so like salary paid, so that is the operating thing, I'll not touch that because that is fine. But if I have finance cost, I'll add back that, because finance cost is not relevant to my operations. Finance cost is my relevant to my investment activities, sorry, financing activities. Okay. Yes, similarly, depreciation is not relevant to my operating activities. Depreciation is relevant to my investing activities. So you, whenever you see that, I'll upload a video right after this one. Okay. And there will be able to kind of understand how the flow is going. Next is, so first thing, you start with profit before taxation and extraordinary items, adjustment for non-cash and non-operating items, and then you get the operating profit for working capital changes. Once you get this, then you change, you add and deduct your current asset and current liabilities, which is your working capital. So earlier I showed you here, na, ki now in the first two steps, you have taken care of the profit and loss account. Now you have to take care of the current assets and current liabilities. So for that, what you do is you remember like this way, that current assets is inversely proportional. So if current asset is increasing, cash flow will reduce. If your current liability is increasing, cash flow will increase. So it's like whatever happens to current liability, if current liability increases, cash flow will increase. If current liability decreases, cash flow will decrease. If current asset is the opposite way. So it's, if it decreases, it add here. If it increases, less. I'll explain why, but just that's the thumb rule that you can remember. Then comes cash generated from operations, and then income tax paid is the last thing that you deduct. Why did you deduct that? Because you started from profit before taxation. So that's why you deduct cash income tax paid after here. Okay. Honestly, like when you do the sum, then you'll understand, because just seeing the format does not help. But for tomorrow, what I'll suggest is, um, I'll just give an overview of the format. So first, when you start the sum, take down this format on a like page, okay, and then start the sum. You maybe like put profit before taxation and extraordinary items, put adjustment, leave 5-6 lines, because maybe some items will be there, might maybe not there. Then leave some space. Maybe do what you can do is this entire operating activities, do it on one page. Sorry, and investing activities and financing activities, you can do it on a different page, so that if you have to add one or two line items, you can do that later on. And then later, once you get all the three brackets, then you can just add the opening cash flow and closing cash flow, and you'll get the cash. What am I even saying, like sorry. Okay, I hope you're getting the point. Like so if you add all the three, the total cash flow from all three things, and add the opening cash flow, then you'll get the cash flow from uh, closing cash balance. So if here it was there, see, if you add this A, B, and C, and add the opening cash flow, this will be the closing cash flow. Got it? Now, let me explain why the current asset is inversely proportional to cash. Now, what happens is, suppose, let's take the example of a debtor. Okay, so debtor is someone whom I have to pay money to. I owe them money. So when my debtor reduces, so if my debtor goes from 100 to 50, means debtor reduces. Now the only time debtor will reduce is if I pay him cash. So debtor reducing means I have paid him cash. So that's why whenever there's a decrease in current asset, it means a cash outflow. Getting it? Similarly for creditors, creditor is someone who I have to pay money. So if my creditor is increasing, it means I have not paid him cash. So that's why whenever there is an increase in creditors, it is an increase in cash because I have not paid in cash. Got it? So that way, if you pay the creditor again, if you pay a creditor, sorry, if you get money from a creditor, so if you won't pay a creditor, if you get money from a creditor, the uh, uh, if you get money from a creditor, creditor will decrease, but you get money. So that's why whenever creditor is going down, cash will increase because you're getting money, and that's why the creditor is going down. Okay. So I hope you get the point. If you don't get the point, just memorize this because it's just for one day. You don't need to understand everything. So current asset is inversely proportional. So if current asset increases, decreases, the opposite thing will happen in cash. And if current liabilities increases, decreases, the same movement will happen in cash. Some items that you need to take care of. Firstly is depreciation. Then dividends or depreciation will come in both operating activities. So here depreciation will get adjusted over here, as well as in the investing activities. Whenever you calculate the sale and purchase of fixed asset, you have to incorporate depreciation there, so that will impact. And then interest and dividend, sorry, not this one, interest and dividend in financing activities. So this one also I'll come to that. Interest and dividend in financing activities is basically added over here. So any kind of interest that you pay is reduced here and you add it back over here. So take care of these things: depreciation, interest, dividend, interest income, interest. So what is difference between interest expense and interest income? Interest income uh, is when you invest somewhere and you get money from it for it. So that is interest income is here, investing activities. And interest expense is when you take a loan and you have to pay interest. So that is your financing activities. Okay. I hope people are still watching. I know uh, like it has been a long day, and you have your ME exam as well. So I hope people are watching it. They'll leave a like if you're watching it. Um okay, income tax paid is also an adjustment which you have to do over here. So here make sure you pay, make sure you take the profit before taxation and then you reduce that from here. I'll explain all these things in the example. So maybe it's best if I share the example before, and then people who still have doubt there, they can come here and watch. And where to start this, I'll explain everything in the example. Got it? So that's it for the cash flow statement. um, I'll put a link over here. I don't know where is this part. I think I'll put a link over here where you can go and watch that video. I think that will help. I've taken only one question to solve, but that question is a very comprehensive question. And I think if that is the maximum level of question that can come for us. Obviously, that is a very basic question, like it's a class 12 question, but I think that is the level of question that can come for us tomorrow. Okay. So that's it, guys. Second last video for term one, and hopefully everything goes well. Make sure to manage your time properly for tomorrow. And yeah, okay, go study, guys. Best of luck.